Yeah, first of all, thank you very much for inviting me here. And I have to say, it's the first time I've been here at Donsø, and I have to say I'm very impressed by the whole community and how people get together, and also I think the whole shipping community in Sweden supports, and not only Sweden. You can see that also last night at the dinner is really expanding to be more international as well. So on that, I really think it's a good event with many insights of the industry. Today I represent more, of course, the bunker side of the industry and trying to look at what is our views of 2015. I probably will not be able to give you all the answers, then it will be too easy for all of us. So there will still be a lot of things hanging in the air afterwards. But I will try my best to give our views and be very open and give answers to those questions that's there. Basically, I just want to shortly introduce OW Bunker to those that has not been here. We have been, in the latest years, we've been in a pretty stable growth. This year we are expected to supply around 24 million tons of bunkers globally. And we hope that we can continue our efforts globally as well. Our base is in Denmark. But a smaller part of our business is now based in Denmark, and more has been, especially in the last year, expanding in Asia. Not to bore you with all the details, but the area here is a strategic area for us. We've always been here for as long as we have existed. This is where we sprung out of Denmark, and have Gothenburg, Skåre, Denmark area is very close to us. And with the changes that we're going to speak about, then of course this is something that has a very high level agenda in our organization on how do we prepare ourselves and where are we going. And that's kind of the insights that I will try and share here today. In this area, we both do cargo trading, we do blending of products, and we do barging. And then, of course, we do a lot of sales to both the Swedish customers and the Danish customers. We also use the area to develop and educate a lot of young people that we then send out in the world afterwards. So again, just underlying that is definitely a key area. But if you then go from our point of view and looking at okay, what is it that we are facing? It is definitely an industry that is being faced with challenges all over. It's not only for the 2015, but it's a whole economy climate that is facing challenges. And for us, that kind of materializes into the same challenges as the shipping companies. We are having our own little shipping company with 38 barges around. So it is kind of the same drivers that we are looking at. And that also goes when we are looking at the oil prices that continues to shift up and down and in a more and more rapid speed. And no matter what these changes are, our approach is of course that, and it seems maybe a little optimistic, but that those changes is also our opportunities. And that's kind of our insight also to 2015. This one we don't have to discuss a lot. We all know that now that 2015 is going to materialize. I think if we had been here 1 or 2 years ago, a lot would have advocated for the fact that we could have postponed 2015. For the last 1 or 2 years, we have been very strong advisors to our customers that we have to prepare because it will be coming. There were so many legislation bodies that was ratifying the changes that it would be difficult at that point to see a change. 2020, we are more reluctant to actually see the same kind of commitment, but still more and more in the environmental bodies are ratifying the 2020, and it is coming closer as well. So it's kind of already there where we would say if it's 2020 or 2025, we still have to begin to prepare. And again, I will go more details, but from our point of view, there is the 3 main solutions. One being the scrubbers. We are seeing more and more investment now taking off in the scrubber side. There's a lot of discussion been done on LNG. I will try and give our views on that one as well. And then, of course, the last one being burning some kind of distillates. I think actually the latter one is the one that is the one we look at the most, and that's also where we would see that 90% of the products shifting from low sulfur fuel 1% to 0.1, 90% of the volumes will go in the box number 3, as it is right now. So that's the one that is one we prepare for. The solution number 1, high sulfur, is rather easy solution. There's plenty of product, there's plenty of opportunities. That one we will always be able to comply with. And then there's the whole LNG, which I will touch more on. Yeah, scrubbers. I think there's a split opinion in different industries, and it's very easy to use the calculations right now in the price difference between high sulfur and gas oil, and then make a calculation how fast that your scrubber will be paid off in an investment. It will go very, very quickly. But then all the challenges about the whole installation of the scrubber itself, the whole technology behind it, and also will it comply with the future regulations as well? Is it a short-term solution, or is it a more long-term solution? It's also one of those and any solution here is who comes first? You can take a decision here that is so wrong that it can actually hurt you, right? In a retrospect, that if there is another solution that's much cheaper, there's so much money involved in the bunker side of the shipping that kind of decision is crucial for you. And I think that's why we are seeing a lot of companies waiting and waiting and waiting. And in this area, if I'm not all wrong in the media, the one that is most progressive right now and been most aggressive as well is DFDS on the scrubber side. But here they also, and we have been doing business with them for the last 4 years in Gothenburg, done all their supplies in Gothenburg, so we have a rather good cooperation with them. And still there, right, half of their vessels, as they've been out in the press, they can simply not install the scrubbers because they will not be in room, and it is technically not viable. So even the companies where we have a very progressive and high investment rate, they kind of don't want to go all in, and they can't go all in. So the scrubbers is there, but it's also a question, if you're not out now, how fast can you actually go on that one? Then, I saw a presentation here yesterday on LNG, which was, I think, much more detailed on the whole technology side of LNG. And it is definitely a very good solution. What we continuously, from our side, as a bunker supplier, lack in the dialogue about LNG is actually the supply of it. There's a lot of, and the cost of the supply. And that's one side of it. And then it's about economy of scale on supplying LNG as we see it. Running a bunker barge will cost us around $300,000 to $350,000 a month for running a simple bunker barge. When you see a bunker barge that's laying down here now from Stena, it will cost them around $300,000 to $400,000 a month to run that barge. And if you just want some kind of economy of scale, you need to have some flow going through the barge. Otherwise, the cost per metric ton is simply going to be too high. So if you have a barge with a cost of that, and an LNG barge will be much more expensive. The crewing, the handling, everything, the building will be more expensive. So let's just, for the argument, say that an LNG barge will cost $500,000 a month to run. And with the customer portfolio that's there, you might be able to drive 2,000-3,000 tons through that barge. Meaning that then you have $150 plus cost per metric ton to supply the LNG. And I think that cost alone is a difficult one to overcome. So from a bunker barge perspective, you need to have a portfolio around 40,000 to 50,000 tons a month to make any economy of scale in running a barge. And then how fast can you get vessels in to do that, right? And so for us, it's a pure bunker barge for LNG will not be quite something that we look at short term. To take that point of view, we're also seeing some of the solutions has been built where we heard that yesterday as well, with the port authorities being the controlling body of allowing LNG bunkering. And we see, I think it's Color Line that has one ferry right where they have to bunker in Denmark because they're not allowed to bunker in Norway. So they actually drive down the LNG by truck from Norway to Denmark. You also have and I think it's not to be totally pessimistic on it, but it's a little bit the whole like, okay, the LNG itself, but then you have the structure of it and what's the environmental impact of transporting the LNG. Again, if I'm not 100% all wrong, and maybe there's somebody that knows more than me, but I'm quite certain that in Sweden and in Stockholm, with the LNG project up there as well, the product is taken by truck down to the barge and then by barge to the vessel. And it's kind of these big supply chains that makes a big cost. And there's somebody front runner, and it's a very good environmental tool, but is it an economical tool? For a bunker supplier, it's difficult to see the economic effect of going really into the LNG right now. I'm not the most positive on that one. There's a lot of downsides on that one, the whole infrastructure, but it is for us, it will be the customer side. Seeing the economical scale of having a strong customer base that is big enough to sustain an LNG barge. And hopefully I'm wrong, because I think from the environmental point of view, it is a very good tool. And if we can get economical scale, I think also the bunkering side can drive down the cost and then become more interesting. We already touched. LNG has been. We're seeing a lot of progression, especially in Asia. That has, come a little bit more to not to our surprise, but especially Singapore. They are really driving hard as well, and not being part of the ECA. That's kind of been a little bit surprising. Where it's more interesting to see the projects in Europe on the LNG. And I think the project, especially in Europe, where they do more X-pipe installation, seems to be the ones that can do it in the long run, because you don't have the cost of the local parts. Then, of course, you have to build the installation, and you need to build the storage, which is another cost. The pricing, again, there was some figures yesterday on LNG and the cost, and comparing the cost. Both in investment and in running the barge, and from a pure desk point of view, LNG seems to be again a viable solution. But before you get to the critical mass, it can be very costly. That's kind of the conclusions that we have right now, and I think afterwards I'm very pleased to discuss. If anybody can convince us otherwise, we'll be very happy to go in. And so looking at the overall price structure, these are there's a lot about like what is the price going to be, and I think actually for distillates it's rather easy to calculate. If it's a pure distillate, if it's a pure gas oil, we could already, if you want to buy that now, we can already sell that now. We can give you a firm price on a delivered product for gas oil now. I don't think you maybe want to like the price that much, but it can easily be done. And I just got an update this morning on the spread between fuel oil and gas oil. And right now for 2015, we're having a forward spread of around $326 in Rotterdam, and then of course there'll be a little barging, but I don't see that being a big difference. So around the $325 mark. It's actually, with the latest increase in Middle East, it has actually come up in the last 2 weeks. It has come up from 290. So what is that leaving us? Where is it that this is leaving us? And here we're just saying, okay, what is the products that we think that we are going to kind of supply now and in the future, and how big are the bunker markets? We still see that even shipping is doing a lot for cost savings and reduced of bunkers consumed. We're still seeing a year-on-year increase in bunker demand. It's going a little faster in Asia. The markets are more stable in Europe, and we're actually seeing an increase in the bunker demands in Americas, in South America as well. So we still predict actually over the next years that we are in a market that will grow, which is okay when you want to sell something and the market is growing. That's of course nice. So maybe we are being over optimistic on our own behalf here. But the more interesting part is the difference between we think the yellow and the blue. And right now for 2015 for the ECA zones, our estimation is that we will have to shift around 10 million tons a year in the total market in Europe, North Europe. Around 10 million tons is going to shift from 1% to 0.1% products. And that is the view that we are. How can we build a supply chain where we can supply around, where the market is around 10 million tons of 0.1? And then we go 2020, where if there's no takeoff in scrubbers and other technologies, then 2020 will be definitely an even higher challenge. Yeah, don't want to go much into it, but it's more of course the interest from the refineries to do something on this one is rather limited. They are not making any money either. So they're kind of not looking at this as a big opportunity. They are not seeing that 10 million tons, it might sound a lot, but in the refinery industry, it's kind of nothing. So we, at least to our knowledge and to those people that we speak to, we're not seeing that the refineries are in a huge interest to change their investment plans of being able to make these products for the marine industry. One thing is also actually, and a lot of people have already touched upon this throughout the latest years, but it's a difference between the flashpoint on the vessel side of gas oil and the inland sales of gas oil. The inland sales of gas oil is much higher, and the flashpoint is on a different level than it is on the vessels. So then we are now we have to ask the refiners to make us a special product for this to cope with it. That's kind of not what we are seeing the larger refineries doing. They are more from focusing on the land side than on the marine side when they are making their product slates. And I think this one is one of the more for us interesting parts of our analysis when we're looking at this. It is divided in the different regions globally, where you have the black one being how much is produced in the region of capacity of the refineries, and how much is it that we are going to consume of the different products. And here it is like there's good oversupply in North America, South America, Africa, Middle East. They have plenty of gas oil for us. The only problem is that we have in Europe side, we're having a downside, and also in Asia Pacific, which for tanker owners should be a good thing, because now we have to transport the gas oil. And that is the scenarios that we are working out already now. There is a shortage of gas oil, mostly in Europe. We do a lot of gas oils for different markets. OW Bunker is actually one of the largest suppliers to the European navies, and they all burn gas oil. So we are doing a lot of gas already right now, and it is a market where it's getting more and more difficult to find the products, and that's not going to be less difficult in the future. So we have to look outside the European region to find the components and bring them in and make them into a 0.1 product that the shipping industry can actually use. And we then build different case scenarios for the pricing on the products. And if you go historically, we are seeing a spread from high sulfur to MGO for around $280. We have been as low as 170, and we have been as high as 420. And then we kind of have built two cases where one is more a takeoff on the scrubbers, and where the MGO is a more niche product because of the refinery capacity, so it should be a product that we will have to blend. And that will leave us around $320. So a good base case here would be around $275 to up to $400. That's probably the spread that we will have between those two products. 275 and 400. That is around the spread. I know that's a big spread, but compared to the different price volatilities in the market, it's kind of okay. But you can actually do a lot here if you're investing in a scrubber. You can actually log in that one if you're afraid that spread will come down, because then you will not have the your savings on your competitors, then you could go out and you can protect yourself on a downside on it. Or if you are having, in the other way, you can of course go out and buy that differential in the future and then have the upside if it goes further up. And that can be done as a financial instrument, like you do with foreign exchange. So that will be a financial hedging instruments that can cover you on those and be part of the whole strategy on how do you actually comply. Yeah, and I think this is more now going a little bit more about, okay, what is the I'll say concerns, but what is one thing is the whole sourcing, the supply chain. But if we are then talking around, let's say around 1 million tons a month with a differential of $300, then kind of somebody has to pay up for a bill of $300 million a month. And those money has to come from somewhere, right? And it is somebody has to put up the liquidity. Either it's going to be the banks, or it can be the bunker companies, or it can be the shipping companies. But the whole liquidity, like where's the liquidity come from? We are already in an industry that is squeezed on liquidity, and we could easily see here that that the bunker suppliers will begin to, they're already doing that many places, cutting down payment terms from 30 to 21 days because they simply don't have the liquidity to fund it anymore. And with the increase of pricing here, the likelihood of you seeing that the payment terms going even further down is there, right? If we have to if you have to ship it in and as a cargo you will pay on 5 days, if you then have to transport it in, then today we are financing around 30 days already. When we give 30 days credit, which we do to our end customers, we continue to give 30 days. But if you then have to prolong that financing days with another 10 days and $300 more, the liquidity has to come from somewhere. I think that's another part of what you will see in the bunker industry, that this is a game changer in such a way that the small local bunker suppliers will have more and more difficulties. Because if you don't have economy of scale, if you don't have the capabilities of the correct sourcing, then you are going to be faced with more challenges. Again, maybe we have to say that with us being able to comply with this, and maybe it's our wishful thinking, but it is really our honest opinion that being a small bunker player in this market is going to be more difficult. And then when we then look at, I kind of try to say, okay, where's the supply coming from? What will it do to our supply chain? How will we finance it? Which we will be able to do. Then of course it's like, okay, but here is where Dansu Shipping meet is very good, because here we get together and we can discuss on what are you going to do as a ship owner and what products are you are, because we have to just make our strategies out of what we think will happen. But what will happen and is kind of another scenarios. and for us that's where where very close and transparent partnership is vital for us to build the right solutions together. I think that we actually, as a bunker supplier, are sitting on quite a lot of knowledge on this. I think the shipping companies are sitting on a lot of knowledge, but it's kind of not shared. There's still, from our point of view, there's still a reluctancy to really have an open sharing dialogue about what solutions will you pick. And I can understand from the shipping companies having that very close dialogue within themselves. Because again, if you take a wrong decision kind of, or if you take one decision and somebody takes another, it is a game changer. It's so much money that it is either it can really make a big difference for your business, or it can kind of be very devastating for your business. And there will be different segments, but in the ro-ro local market segment in North Sea will be, which from our point will be very much the one hurting the most. There it is a big decision. It is a top level management decision on what they do, and they are keeping their cards very close to the bodies. And that, I'm just saying, that makes it difficult for us as a bunker supplier to build the right solution. And another part of that is also, again, what is it in the dialogue right now, we are still seeing that a lot of the dialogue comes about the infrastructure. It comes about how to do it, but we don't see that much dialogue about the whole financial side of it, and how is it, what kind of information is actually out, and what kind of instruments is that you can link to your strategy on protecting yourself, and that we're just putting that up as saying that we think that's a card that is, or a piece of the puzzle that we should also put into the equation. And again, probably this is more the sales part of it, sorry. Born as a salesperson, I have to give them one. But choose your suppliers carefully, right? And I think that kind of is a vital part of not only now, but also in the future. I think what we will see is that a lot of people will be extremely creative in how to blend products. There's so much money involved that blending different products will be something that a lot of people will look at. There is already a lot of people that's trying. There's new people coming and say, okay, we can buy a refinery in Russia. We can put through some fuel oil. We can go through the process a few times, and we can take out the sulfur, and then we can ship it down. With all this money involved, that can be a good business. There's crude oil that's coming directly out of Sudan that can go through a refinery. You can blend it one time, and you get a fuel oil that will be compliant. You have fuel oils in Indonesia that you can actually also do some process through that can be compliant. You can blend different components together, and that will also actually on the sulfur side be compliant. So you can face a market where you will have a lot of different people coming out in the industry. There was a lot of news, especially, I don't know if you saw, but in Denmark, that there will be a biofuel plant built in Frederikshavn that will be able to produce a compliant fuel as a biofuel, and where they use wood to do it, right? Okay, we don't have enough wood in Denmark to do it, so then we just have to ship that in, and then we have to do it there, right? It's like, and so all these creative, there's so much money involved in this that there will be a lot. We had a proposal from an American partner that was there you can build an land-based reactor, and then you can put the fuel through that one, and then all the sulfur disappears. And it might work. I honestly, at this point, I would not be able to say if it works or not. They're very convinced, of course, it will work. But all these magicians, I would not say, but it's, of course, there's a lot of hard work behind that, and each idea should be evaluated. But it will just leave a market that can come with some products that can be interesting, if that's the right word. And there will be a lot of that as well. So that comes back to ensuring quality and quantity when having a bunker supply. I don't think we should lose the focus on that, not now and not in the future, about how important it is that you when you're conducting the bunker side. I would say Europe, North Europe is a high-end standard of bunker supply. But when you get around different places in the world, you will see a more gray zone way of bunkering, and we all know about the quality and especially quantity disputes in the industry. And for our point of view, that's where we have invested rapidly in mass flow meter technology in order to ensure that we, in the partnership, continue to supply the quantities that has been agreed, and that you only pay for what you actually are getting. Yeah, so I think that was the overall input that we brought today. So I will be open for any questions. If it gave enough or too little.
You were saying that it was possible to get this crude oil from Indonesia or some other country with very low sulfur, and just do some small thing and then sell it as a fuel.
Yeah, yeah.
Are you working with it, your company?
No, most likely, yeah.
And what will it cost?
Yeah, we now I have to say we are owned by a Swedish equity fund, and a Swedish equity fund, they have one goal in life, and that's make money. I will not hide that. I cannot hide that, because we are a Swedish-owned meaning that a price on a product like that will be market price.
What ugly people.
Yeah, that's why I could say, right? I could blame the Sweden now. Now, of course, if you're the only one that comes with a product that is compliant, then of course you will give some kind of discount on the product itself in order to sell it. But you'll probably, let's say you can produce it for $200 less or $150 less, and the market is $300 above, right? You'll probably not go in and give all the money away.
Then it is not 270 up to 400. Then it's 270. That gap will be much lesser, of course.
No, that's why I actually narrow it.
If we succeed with this product, the gap will be much lower.
Yeah, from our side, from our producing side. But I still see that there will not be enough. There will not be enough 10 million special blend. So meaning that's where you will see that some will have some niche products, and then they will try to make a lot of money on that.
But not enough.
I don't think there'll be enough of that. No, it's very limited, and those that are sitting on the products, they also know it. Like especially in Sudan, there is a crude oil in Sudan that is extremely low sulfur. And the price of that one is already picking up, and you have to commit for a very kind of long time, and already you have to begin to commit now, and you cannot use it now. And so on. We have taken a few loadings in to Rotterdam, but you have to remember you still have to actually and it's not an easy process. You really need to know what you're doing, and that's why I'm saying that this blending products is something that you need to. You need to know who's doing it, and you need to trust the one that you're buying it from.
That's one question. But if you choose a quality supplier, then that is solved. But one question, Søren, in my work, Ultra and VGO and that Sudan crude, we are at least 50% of the ECA demand. Yeah.
But you also have a lot of power plants that would like some of these products as well, because they are taxed on how much sulfur they are burning. So you're not just looking at these products. Are not just looking for the shipping industry. You always have a secondary market called power plants. And if you get these, you will always be saying, if the shipping industry is not willing to pay for it, we just shift it over and then we put it to power plants. And that's kind of the
ugly people again.
Yeah. Yeah. So
this change in from fuel oil to low sulfur products, will that have an effect on your supply systems?
A lot, yeah. It will change completely. I think you would right now you can say like Gothenburg is actually one of the best examples, because in Gothenburg the market in Gothenburg is 90% low sulfur, 1% fuel today, and a very little high sulfur. There's not that much high sulfur fuel being sold in Gothenburg. And the economics of taking in product and blending product to 1% in Gothenburg today is not there, because of the cost of entering the port, blending the product, the financing and so on, and taking it out, compared to take it out of the refineries here. The refineries are producing a very nice product. So then you would, as a bunker supplier, you will source from the local refineries, and then you will go to the ships and supply it. Where in the future they will not have enough. So then they'd have, if there is a bunker market in Gothenburg, you have to import it. So and you have to blend it.
In theory, we'll move more bunkers around.
We will, yeah, a lot more. It's the same in Denmark. Like our sourcing is for low sulfur, 1% low sulfur. Our sourcing is 95% directly from refineries. It's simply not feasible to put it in storage. Not only Gothenburg, but nowhere. Like you will have a cost of putting it to storage, the finance of it, taking it out again. And it easily costs you $5 to $10 to do that, and there's no margins in this market for $5 to $10, and there's no blending margin in that product at all. So and in the future you will not be able to get enough of the gas oil out of the refineries. So it will be shipped in, it will be blended, and it will be then taken out again, and then hopefully the margins can pay for it. Yeah.
It's good for Trygve's business.
Yeah. Yeah, there'll be. I think there'll be a lot more H&B transportation around in the area, of not only finished products that is totally blended, but also blending components.
The oil that you're going to take from Sudan, I presume that has to be refined.
Yeah.
Yeah. Is that something that you would then Because I guess it's not huge volumes compared to, you know, the big refineries. Is this something that will be refined in smaller refineries, or will you?
There's different opportunities there, but it's a very difficult process, and I'm not certain that we will do it because the price of the Sudan crude has been going up a lot. So it's actually the economics of that doesn't look that attractive right now, because the Sudans have realized how valuable that part of the crude is right now. But it's a very difficult process because of the flashpoint. You really need to, and if in any of these products, if you get down on the flashpoint, it's difficult to get it up again. It's very expensive. So therefore, it is you need really the right process to do that one. Yeah.
If we stay in Russia, is that high sulfur, the crude coming from the ground?
Yeah.
And that's our area. Will they be possible to do something, make a cocktail and get it down to 0.1?
They will at least try, that's for certain.
Are they trying now?
No, there's a lot of these smaller micro refineries closing down around in the world, right? And there's a lot of investors looking at buying those, and there's actually, I think also there's a Swedish investment fund that is buying up refineries in Sweden in order to do this, in Russia in order to do this. So again, they're looking at that. And I think these are the uncertainties about what the price spread will be, right? Because if somebody succeeds in that, you can see a price spread of $100, $200 on a delivered product, because then you will get some kind of fuel that will be compliant. And that's where I'm saying if that materializes, and I have to say a big if, because right now it is some kind of gas oil that you supply, but if that materializes in some kind of way, then investment in LNG or investment in scrubbers doesn't look attractive anymore.
No, that is our headache.
Yes.
Yes. And
but if I had a goal,
if it's 400, then we should
shift.
LNG.
Yeah.
Is it 150? Then we should stay where we are.
Yeah.
Ladies, have we become wiser or more question mark?
More questions.
More question mark. Vad säger ni? Any more questions? A lot of more questions.
Yeah.
Søren, it was lovely. It was.
Yeah. Sorry for raising more questions than answering. That was kind of not the idea here. Yeah.
Søren,
No, but yeah. So, but yeah. Thank you.